Hey there, it's Dean Odell with 7 Gables Real Estate and the Odell Group. Today is June 17th. It's time for another Tustin Talks. This is the Tustin edition where we're going to go over some data that's specific to the area here. And we're going to talk about Orange County first. So let's go to the charts. Okay, so looking at the current inventory, we just keep climbing. We are at 3,059 homes on the Orange County market now. That is up 12% in 2 weeks, and thank goodness for that. We're headed in the right direction. We're headed towards normalizing this market. So let's look at the 3-year average. We had 6,500 homes roughly as our average. Now we are at only 3,059, so that just tells you we are like halfway back to what back then was still below normal. So thank goodness we're going up here. But here's what's interesting. Not as many people are listing their homes. If you look at the 3-year average, we actually had 654 less homes come on in May than normally happens. So people are staying in their houses, you know, they're locked in on these lower interest rates. People don't know where to go. Even though they have all this equity in their homes, people are staying put. So that's kind of interesting. Now, the other thing that's interesting is the houses that are on the market, 36% of them have been on the market for over a month. So remember all that talk about, hey, put your house on the market, it sells first week, you know, there's 10 offers, 15 offers. Yeah, that's not happening so much anymore. So we'll talk more about that. But look where we've gone from the beginning of the year. We've gone from roughly 1,000 homes up to 3,059. So that is a triple in inventory. If you look at the other years prior on this chart, you'll see most of them had barely gone up throughout the year, let alone triple. So this is very extraordinary that we're seeing such a great rise in inventory, but yet we are still way below the norm. This is the first time that we've had more than 3,000 homes on the market in 18 months, since December of 2020. Wow. So looking at this next chart, we're looking at demand. Now demand is down 27% of the 3-year average and 34% since last year. But you gotta remember, last year was a record year. That was like the most crazy year ever in the history of selling homes. So we gotta look at this big picture, right? Let's look at where we are demand-wise now for this year, the orange line. We are at 2,020 homes, which is down 4% in a 2-week period. Now, if you look at all those other lines, you'll see that usually during this time, except for the green line, because that was our crazy year, right? If you look at that, normally things are kind of just maintaining steady. They don't go down. So why are they going down? Well, of course they're going down because of high interest rates. High interest rates are muting demand, okay? So there's been about a 3% hike rate, which that is insane from the beginning of the year. That means that's like having a 30% price increase for the average buyer who's only got 20% down. So yes, purchasing power is dropping. The guy that could buy $1 million house can only now buy a $700,000 house, and the $700,000 houses don't look real great after the last couple of years, right? So anyway, that's what we're dealing with right now on the demand side. So we have supply going up, we have demand coming down, and let's see how that affects our expected marketing time. So looking at the expected marketing time, which is the orange line, you could see how it is starting to move steeper and steeper, and time is climbing. We are now at a 45-day expected marketing time. We started the year closer to 20. 2 weeks ago, we were at 38, and last year we were at 22. So what does this all mean? Well, in 2 weeks, we've basically had to go up a week in expected marketing time, right? Because that is what's happening between the balance of supply and demand. Things are taking longer to sell. People are putting their houses on the market too high and having to reduce. They're sitting on the market for 30 days or more. Well, if we just follow the animation we're gonna do here for you that shows this line continuing straight, notice when it hits the 120-day mark, which will be a slight buyer's market, and when it hits 150-day mark. Also notice when it hit the 90-day mark. That's when it's a balanced market. So look at the bottom here. What month is that gonna happen in if we continue on this trajectory? Now the trajectory can change. You can see the orange line. The trajectory has changed from time to time, but if we stay on this trajectory, you guys, there's a chance we may have a buyer's market by the 4th quarter, slight buyer's market, okay? Because we'll just have to see how it goes. Okay, now looking at this expected marketing time broken down by price, you got last year's numbers on the right, you got this year's numbers on the left for expected marketing time, and you can see in all cases, it's taking longer to get a home sold now. You can see what the demand is versus the share of inventory and how that breaks down. And you can see that in the higher end, certainly, from 2 to 4 million, which, there's a lot of homes in this area in that price range, you can see where the marketing time's gone from 44 days all the way up to 77. So that is starting to get closer to a balanced market. Remember, 90 days is a balanced market, right? 4 to 8 million, you can see where that is, and over 8 million, you can see how that has really slowed down as well. So those are definitely getting into that slight buyer's market territory, right? So we've been talking a little bit about houses sitting on the market. So we have a sitting on the market chart for you. How's that? It breaks down by price range. Looks a lot like the expected marketing time, but look at the price ranges and look at how many days these houses are sitting on the market by price range now. So this is the number of homes and the percentage that have been on the market more than 30 days and more than 60 days. And so that's going to be an interesting number to watch over time as this market slowly changes and moves itself more towards a normal market. The frenzy is over, okay? Okay, so let's move to the last chart, which is the Tustin data chart. You're only gonna see this here on Tustin Talks. We got the 3 zip codes, 92705, 92780, 92782, and we're talking about what it looks like this year versus last year. May 2022 versus May 2021. We're gonna read this across by zip code. You can see what's for sale and how it compares to last year in all the zip codes. You can do the same thing for the new listings, the solds, the pendings. Just keep on going down and across and reading through this. Average days on the market, still all 3 zip codes was under 10 days on the market. So even though we just reviewed Orange County's numbers, Tustin has been a hot market. Speaking of which, I had a reporter call me because Tustin was named the 8th hottest market by Zillow in the United States. And they were writing me from Michigan and they don't know anything about Tustin. So they wanted to know what is going on in Tustin. So that's an article that maybe we'll share with you when it hits. Anyway, and just to finish up on this chart, you can continue to read through these numbers for yourself and just see how hot this Tustin market has been. So let's move to my advice for buyers and sellers. So it was another crazy couple of weeks and the market's changing, right? We've got things going on in the stock market, values are going down there. We've got interest rates just zooming up, but we still have this demand for our area, which we know is not what it was last year, but still a very good market for sellers. I will tell you, I'd be really, really surprised to see prices go up from here. That's all I can say, Right now, prices are holding. There's still multiple offers on houses that are priced right. The ones that aren't priced right are gonna sit, which brings me to this advice that was in the Orange County Housing Report this week from Steve Thomas. I'd like to read it because I think it's pretty dead on. So this is to the sellers. It says, sellers, sharpen your pencils, scrutinize all comparable data and price your home so that it will sell. Do not learn the hard way that this market is not the same as the frenzied market of the past 2 years. 100% on right there. Attention buyers. There are finally more choices, but if a home is priced well, it will not last. Do not mistake a slower market as a buyer's market. It is still a seller's market. Buyers looking to negotiate should consider homes that have been on the market for a while and are having trouble securing a buyer willing to make an offer to purchase. Right on that one as well, okay? I will tell you right now that in the last 2 weeks, we've listed 3 properties. They all are being swarmed with buyers. We just had one that had 5 offers on it, sold for $100,000 over the asking price, and that was in the 1.5s. So it's still out there. The good properties, people want them. They will pay for them. They'll pay market value. We're still trying to figure out sometimes what market value is. But what we are seeing is that things aren't just going up higher and higher and higher, okay? So we're purposely pricing our houses aggressively because we know there's enough demand out there that the market will bid it to value. But the value that they're bidding to is making sense and in alignment with the comparable sales. So hope that makes sense for you guys. If it doesn't, we'd love to talk to you more about it, show you how we get the most money for our sellers and how we make sure our buyers don't overpay for houses. So give us a call or click the like button down here, subscribe, make some comments if you want, and we'll see you on the next Tustin Talks. Thanks, bye-bye.